Mortgage rates are dropping, competition is rising, and now everybody's talking about the possibility of a 50-year mortgage. But what does any of this really mean for buyers and sellers? Today, I'm breaking down the real truth about mortgage rates, how falling rates affect home prices, and the pros and cons of the new proposed 50-year mortgage, and what it means for you. Hey everyone, it's Dianne J., your Scottsdale and Tempe realtor and licensed loan originator. Welcome back to Living in Scottsdale, where I help you navigate the Arizona real estate market with confidence. If you want real, no fluff info on financing, buying, selling, or Arizona living, make sure to subscribe and hit that like button. Mortgage rates are falling. Here's what that actually means. Let's talk about the big headline. Mortgage rates are finally dipping under 6%. Now, most people see that and think, great, buying just got cheaper. But here's the part that no one talks about. When interest rates fall, home prices typically go up. Why? Because lower rates bring more buyers back into the market. More buyers equal more competition and higher prices. If you wait for rates to drop even lower, you're not just competing with more buyers, you're also paying more for the same home. So drop the word rate in the comments and I'll send you a personalized payment breakdown at today's interest rates. Why buying now might be smarter than waiting. Right now, we're in a sweet spot. Rates are easing, inventory is still low, and competition hasn't exploded yet. Historically, when rates drop into the 5, the market takes off fast. That means multiple offers, higher list prices, and less negotiating room. Buying now could actually save you money long term because you're avoiding that surge. If you want me to run the numbers for you for your price range, send me a message. I'll map out your monthly payment today versus if prices jump 5 to 10%. The 50-year mortgage, what it is and why it matters. Now let's get into the big topic everybody's discussing. The proposed 50-year mortgage that's been publicly floated in conversations around housing affordability. It hasn't been approved or implemented yet, but it's being talked about, so let's break it down. Pros of a 50-year mortgage. There are some potential benefits. 1, lower monthly payments. Stretching the term reduces the monthly payment, which can make home ownership more accessible, even though the savings often aren't as big as people expect. 2, it could help first-time home buyers, especially those whose income haven't kept up with rising home prices or who need flexibility to get into their first property sooner. 3, more flexibility and affordability up front. People could buy sooner instead of waiting for lower rates or saving a larger down payment. 4, and here's an important point. Most people don't stay in a mortgage for 30 years, let alone 50. The average homeowner moves every 8 to 12 years and many refinance long before that. So a 50-year mortgage could actually be a strategic tool, especially for investors who care more about cash flow than paying off a property quickly. Lower monthly payments could help investment properties pencil out better, even if the long-term interest cost is higher. If you want to see what your payment would look like on a 50-year term, comment 50-year and I'll run a sample scenario for you. Cons of a 50-year mortgage. But there are also real concerns. 1, much slower equity growth. Most of your early payments go toward interest, not principal. 2, you pay more interest over the life of the loan, a lot more. And here's the part most people don't realize. The monthly payment difference isn't as dramatic as people think. Let me give you an example. On a $500,000 loan at a 6% interest rate, a traditional 30-year loan is about $2,998 per month. A 50-year loan only drops that to about $2,749 per month. That's a savings of only about $249 a month. But over 50 years, you'd pay hundreds of thousands more in total interest. So yes, the payment is a little lower, but the long-term cost is significantly higher. 3, higher risk if prices stagnate. You could stay underwater longer because you're building equity more slower. And 4, market disruption. Changing the U.S. mortgage system isn't simple. Lenders, regulators, and investors would all need major adjustments. So while a 50-year mortgage might help with affordability in the short term, it could create long-term challenges for homeowners. So is a 50-year mortgage good or bad? Here's my honest take as both a realtor and a loan originator. It could be a tool, not a solution. And right now, it's not an option you can walk into a lender and apply for. But it does show that the industry is trying to get creative as home prices and rates shift. What you should do next, whether you're a buyer or seller. If you're buying, don't wait for rates to fall to 4 to 5%. By the time that happens, prices and competition will surge. In Arizona, we've been hovering in a seller's market for months, and interest rates falling could definitely mean buyers will pay more. Don't wait. Act now to get into a home with proven strategies that I use to help my buyers, like rate buydowns, credit optimization. Different loan types equal different rates. Choosing the right lender structure and correct timing and strategy. If you plan to optimize your buying power, schedule a free strategy call with me using the link below. If you're selling, lower rates can bring more buyers and can increase your home's value. This could be the perfect moment to list. If you want a real data-driven plan for buying or selling this year, schedule that free strategy call using the link below. The bottom line, rates are improving, competition is building, and new mortgage ideas are being discussed. But the smartest move is to get ahead of the crowd. If you want expert help with both your home search and your financing, I've got you covered. Schedule your strategy call, explore listings, and drop your questions in the comments. Thanks for watching. Don't forget to like and subscribe to Living in Scottsdale. I'll see you in the next video.